Denmark has a problem that other European countries would love to have. The global success of drug maker Novo Nordisk and its anti-obesity treatment, Wegovy, has given the group a market value of $440 billion, Europe's highest. Its sales account for 8% of the country's GDP. Hosting corporate giants can be problematic for small countries, as Nokia showed in Finland at the turn of the century, but Denmark could cope. Exports of Novo Nordisk drugs have boosted the country's current account surplus to an eye-watering 13% of GDP last year. And according to some estimates, the group and some other smaller drug makers have contributed 2% of GDP in the last year and a half. But there is another side of the coin. First, the current account surplus is boosting the currency, the krone, and since the krone is pegged to the euro, this forces the central bank to set its interest rates lower than in the eurozone, which is bad for the fight against inflation. The second problem is that Denmark has a big fiscal surplus thanks to the taxes paid by the pharma sector, but it also has the highest tax burden in the OECD. There's clearly something wrong here. Tax cuts could come in the form of investment incentives for the corporate sector or in the form of welfare payments, notably for immigrants, as the IMF recently suggested. Denmark has its own obesity problem. It is time to trim the surplus.